Hello traders, and welcome to another week in markets. Okay, so on Friday, US markets, US equity markets closed Friday and the week on a positive note. We had S&P up 0.5%, the Dow up 1%. What was meaningful about those closes was that they closed on new record highs again. For the S&P, it was the 45th day this year that the S&P has actually closed and made new record highs. So a very bullish story for US equities. The Nasdaq is 1.5% away from record highs, so I can imagine if S&P continues doing what it is doing, we probably will see new record highs for the Nasdaq shortly. Look, US equities at the moment are in a sweet spot. US data has been very positive. They still have positive GDP growth. The employment story is exceptionally good. They've got inflation that is obviously trending down to target. And the equity markets are looking forward to more rate cuts. So it's very hard to make a case at the moment to sell US equities. Certainly we're going to have to see, some sort of narrative change before we can make a case to sell equities. So whether or not that's in a couple of weeks when the US election comes around, I guess we'll have to wait and see. But anyway, this week US equities will be focused on third quarter US corporate earnings season. Now the big names that the market obviously watches is the big tech names, so the Magnificent Seven. But we won't see any of those this week, but what we will see this week and the market will focus on is Netflix, which releases its earnings on Thursday. Okay, so moving along, on the weekend we did actually see some news out of China. Firstly, we saw some China data. So we saw Chinese CPI, inflation data, and also PPI, Producer Price Index, for September. Now those numbers actually came out much weaker than expected, and they actually came out below the August numbers. So the numbers were actually pretty poor numbers, and obviously the deflationary story in China is well and truly still alive. The other thing that the market was waiting for out of China on the weekend is the Ministry of Finance held a press conference, and the market was hoping to hear about some more fiscal stimulus. Unfortunately, that press conference did disappoint again. Even though the Chinese are pledging a lot of fiscal stimulus, we never actually got any specifics. So exactly the size of the fiscal stimulus, when it's going to come, and what sort of form it's going to look like. So there may be some disappointment when the Chinese markets open today. So that's something to look out for. Okay, so moving along. Look, every week recently we have been seeing global central banks easing. Last week it was the Reserve Bank of New Zealand, and they cut rates by 50 basis points last week. This week on Thursday, we're looking forward to the European Central Bank, the ECB. They are looking to cut rates by a quarter of 25 basis points, their deposit rate from 3.5% to 3.25%. Now, the ECB did cut rates in September, and they weren't due to cut rates so fast again in October, this week. But since their last meeting, we have seen some very poor data out of Europe, and especially in their manufacturing PMIs, which are well and truly in contractionary territory and have actually dropped to 15-month lows. And hence, we've got a euro, which is much lower, and it's sitting just above 109 at the moment. I would suggest that I wouldn't go racing in to buy euro yet. I'd certainly wait for Lagarde's press conference after the actual rate decision, just to see how dovish the European Central Bank is further out. Also on Thursday, we actually do get some top tier US data this week. We get US retail sales data. The expectations is for that data to be good. Surprise, surprise, US data being good. So no doubt that will probably keep US bond yields buoyant where they are at the moment. I mean, we still have US 10-year yields, at 4.1%, and US 2 yields just trading just below 4%. So that is keeping the US dollar bid at the moment, and it is hard to sell the US dollar again to start this week. Okay, so on a final note, we still have geopolitical tensions, obviously with Israel potential retaliation with Iran. There was no news out over the weekend, but look, two markets that certainly have been benefiting from these geopolitical tensions is crude oil and also gold. Buying dips on both has been working. And I would suggest to stay with that strategy. These are risks that certainly we can't ignore because it just could happen at any time. Anyway, listen, I hope that you have a great start to the week trading, and we'll check back in again shortly.